And we welcome you back to the Means Report, everybody. Today we're kicking off the new year by talking about your finances and the economy. We touched on what to expect in 2011 as far as the stock market and investments go with Jeff Fairman in our first segment. Now it's time to talk about taxes, a timely topic for sure because we're all about to file. Abram Serotta is a partner with Serotta Maddocks Evans Co, a great certified public accounting and tax advice firm here in Augusta. They've been here forever. He is kind enough to lend his expertise to us here on the Means Report. And Abram, thank you so much for rejoining us. We had you late in 2010 to talk about what to expect for 2011. Now here we are. Congress has passed new tax laws. We talked about the fact that they might, and they did. I know it's a broad question, but what's your opinion of the way things have gone over the past few weeks and the changes that are there?
For summary purposes, Brad, the best way to say this is be careful about what you wish. We had all of the Bush tax cuts extended, plus everything else everyone else wished for. So it was a broad bill, has a lot of tax situations, has a lot of money that was spent, but not necessarily as helpful to all as could be, but the Bush tax cuts was what we spoke about, and they did pass.
For individuals, what specifically is out there? We're preparing to beat that April 15th deadline. What's out there for the individual taxpayer?
Well, what everybody hears about are tax rates, and the Bush tax cut rate that was expected to expire at the end of 2010 didn't expire, and it is extended through 2012. But for individuals, there's a lot more to the tax law than just the tax rates. There are dependency exemptions, child care credits, tuition credits and deductions that were done. The teacher's credit of deduction for $250 was extended through 2011. Most of the cuts were 2012, but Congress couldn't make it simple, and they have different dates for different extensions from that standpoint.
Does this help me owe more or less taxes in the new year to the average taxpayer? You talk about the deductions that are out there. So am I looking at perhaps, and I meaning the viewer, at least a short-term benefit here where I might owe the government less?
Well, I think you're saying the glass is half full and half empty.
That's right.
You were going to owe more, and now you're at equal.
Okay, gotcha.
You understand the spin doctor?
I do.
You're now where you would have been in 2010, 2011, and 12 will be similar.
Oh, okay. All right. What about businesses out there? We know that you handle a lot of business tax filings in the CSRA and beyond. What's out there for the business owner, small or large?
Well, those businesses with pass-through rates get the advantage of the individual rates. Those as a C corporation do not get any changes. What the big thing out there is depreciation on buying of new assets.
Okay. And
the rules are very complex. Prior to this bill passing, there was an additional what we call Section 179 that you could write off up to $500,000 of buying new equipment. In addition to that, they passed what's called bonus depreciation. They extended the old 50%. You could write off 50% of your assets if you went over the $500,000 or you didn't want to use the other provision. And from September through December 2011, you can write off 100% without any limitation. That is really for businesses who are looking to expand, who want to hold their taxes down for a time. This is really a big boost.
It is a big boost. And so are we talking about only equipment purchases here? Can it be inventory? Can it be new hires? Anything like that?
Well, the new hires, they extended the tax credits for certain low-income new hires. But what we're talking about is equipment. There are different rules for new equipment and old equipment, and you need to get the details before you buy the equipment.
Let's talk about the inheritance laws and what might be changing there. Here's the way it's been explained on talk radio, which might be the way that a lot of our viewers understand it because we're lay people. If you inherit $1 million or less from your relatives, it can't be taxed. anything over $1 million, Uncle Sam gets half of it. Is that right?
Not currently, and it depends on what year you plan to die,
right,
or you don't plan to die. What they did was extend the inheritance tax exemption. Otherwise, anything up to $5 million per spouse will not be taxed.
Okay.
In addition to that, they made it portable. So if one spouse died with $2 million, then the next spouse would have $8 million. There's also a thing about leaving money to grandchildren. That was raised from $1 million to $5 million. So if you died in 2011 and 12, which is a short term, they've answered that. After that, we're back to the $1 million you referred to. But the best benefit that wasn't talked about at all was a $5 million per spouse gift limitation, meaning you can encourage relatives to give up to husband and wife $10 million during lifetime,
okay, for
11 and 12. And if they died in 14 or 15, it doesn't matter what the rules are. And this is a big planning opportunity. One last thing is, for 2010, there was no inheritance tax. However, there's a provision you might want to elect that so that your assets get a value at the date of death. Very complex set of rules, but if you had somebody to die in 2010, you need to get some professional help to see which of the rules you want to choose.
Well, are you then talking about, as far as your comments on planning for your estate, giving away most of your stuff before you die to make sure your descendants aren't taxed on it?
Well, you don't have to give away most. There are things you can use with certain types of trusts, certain types of entities to sort of ensure that you can give it away, but at least have some income that you can live off of before you die.
Right,
sort of a necessity.
Yeah, absolutely, it is a necessity, but there are just so many changes. I want people to just have a general feel for what to expect here. So it almost sounds like, whether you're talking about individuals, businesses, or heirs, we're kind of getting a break for now, a one, perhaps year or so longer break from any major changes. Is that accurate? It kind of seems like we're just maintaining the status quo.
Well, sort of like the rates. You have to look beyond 2012. That's a short period of time.
I know.
So therefore, what we're saying, if someone, husband and wife, is worth over $1 million, they need to sit down and replan out their situation, either with a tax attorney, CPA, or the team, such as Jeff could be a member of the team. Other people in the estate planning team would get together and do some planning.
What is the individual taxpayer looking for when they come to see you? What's on his or her mind? What's the main thing they want out of the whole filing experience? Is it a bigger refund? Is it better advice for next year so our paychecks are larger?
Well, clients like yourself, Brad, are looking for a refund. What we offer is not only to talk about the refund, but to plan for the future.
Yeah.
And to look at how we can minimize taxes based on what the tax code offers us, whether it's retirement planning, whether it's gifts to grandchildren, gifts, education of your children. There are many opportunities out there that you can set aside funds or reduce your taxes and accomplish these goals.
In your experience, just look at your lifetime of tax expertise. Do you see things getting progressively worse for the U.S. taxpayer, where more and more of our money is being taken away or going away, or do you see things improving and moving in a better direction?
Jeff mentioned gridlock earlier. Gridlock continues in the area of taxation from that standpoint. So it's very frustrating for professionals to be planning in either laws to change at an instant notice, as we did at the end of the year when everybody had given up, or to have laws change. We probably had 5 or 6 different types of tax bills in the year 2010. They all have different dates associated with them, and that's why we spend huge amounts of money on computers to sort of assist us in preparation of tax returns so that we can remember all those dates.
How much, if any, of the changes that you've talked about are reversible if another party gets in office, another president gets in office? Can he or she undo what's been done, or are we locked in?
Everything is changeable, especially pre or post election time, as we've learned. And we have to realize in the Senate it currently takes 60 votes to pass something. So it takes a consensus to try to pass things. What we as professionals are more interested in is simplicity, and that's been a frustration over the last 20 years or longer.
So would you say that's your hope for the future, is to see the government make things easier for all of us? If not, what are your hopes down the line?
That was my New Year's wish or dream.
Yeah.
I'm not sure that it will be accomplished. There was a shooting star, but I don't think that added to the possibility.
It would be nice, though, wouldn't it?
Yes, sir.
Just to have it be so much easier. Well, you always bring a wealth of information to the table, and I agree with you. Mr. Serotta and his team constantly have to keep up with the changes, and they seem to be coming fast and furious lately. And we need you to come back often, and I hope you will, to share your advice and your input with us.
Thank you very much.
My pleasure. Abram Serotta, Serotta Maddocks Evans Co. Go see him. When the Means Report continues, we'll talk about a very special opportunity for you to help people battling Alzheimer's and help those researching the disease for treatments and cures down the road. We hope a great event coming up when we come back.